taking everything harder to make it so we can slow things down against inflation. That's why some of the action is choppy, because that spiked our yields. I didn't think that would happen. But Jeff, one of the things that's really occurring here is that we are in an oversold status, basically trying to figure out when Santa is going to come to town.
Yeah, and look, the charts interpreted by Larry Williams last night, he seems to believe the optimal buying point would be Thursday.
But
now,
if you say it seems, and then it's worked every time. I mean, he did a calculation last night. It's not like it works half the time. It works every time.
Yeah.
But it's all timing. And we are jumping the gun with the Disney buy.
Well, look, I think the seasonal patterns that Larry described matches well with the oversold conditions that we've seen in the market. I mean, look, we have today, the market's a little higher, it was lower at the open, but if the S&P were to fall, it would be for the fifth straight day in a row of decline. So,
but at the same time, Bill Paul is the keeper of the oscillator, which is a fantastic concept. Yeah. This is oversold or overbought. Says we might not necessarily reach a bottom. However, you know that we have to be done selling at these levels. It's rarely been right. In 2008, it was right to sell down -4. It's much harder to buy and to leg in. We went over a series of buys every single morning. We do that. And the Disney seemed natural to us because of all the news that we're beginning to get about what might happen to unlock value.
Yeah, there was a very interesting piece this morning from Wells Fargo. Disney is a signature pick of theirs. They kind of they theorized that what if they did spin off ABC and ESPN? Look, very interesting. We don't know exactly what Bob Iger's plans will be for the company just yet, but you have to think all options are on the table, and spinning off this business would be one way to fix up the balance sheet, which is something that you've been saying for a long time.
Now, the problem with ESPN is the cost. If Amazon and Alphabet are both interested in the dish, the package, the NFL package, then they might conceivably be interested in ESPN. Now, the rights to the NFL are very hard to get. Amazon's got Thursday night rights. Amazon has a great balance sheet. Alphabet has a great balance sheet. They could become the place to go. Now, the problem with that, of course, is that that's not their core business. And so you have a situation where you have to do some selling. And so does Bob Iger have something lined up? That Wells Fargo piece seemed more than prescient. It seemed as if it had been checked off by Bob.
Interesting. Yeah, interesting. Now, we just had the chart of Amazon up. Amazon was a stock we did add to also yesterday. A little bit controversial given the fact that the stock has been on a steady decline, but
down 50%, not seeming to be holding here. Just straight down from when they hired too many people for COVID.
Yeah,
they have not gotten their. Remember, you have to get your expenses in line with your revenues, and this company does not. The idea is that Jesse will do that with giant layoffs that have not occurred yet.
Yep. So they gotta lay some people off. On the other hand, gas prices have come down too, which is obviously positive for their business as well. So I think there is a case to be made that a lot of headwinds of this year should be alleviating as we look forward to 23.
Right.
We had the chart of Wells Fargo flash
Let's go back
earlier.
To that. Yeah. Now, Wells is, obviously, it's just a story that I'm frantically trying to report on this morning. Wells, all right, this was at one point down 1, at one point it was up a half. The problem and the confusion here is that they did indeed have a $3.7 billion settlement with the Consumer Financial Protection Bureau for all the horrible things that were done before Charlie Charles got there. And they were horrible. We didn't really know the full extent of what Mr. Stump was doing. But it was all taking advantage of consumers in a very bad way. So we had $3.7 billion. Now, here's what's important. The bank had reserved for about $2 billion of that. $1.7 billion is the real number of the check they had to write the penalty. But there's also, of the $2 billion, they haven't really spent $3 million of it. So so they've had this big theme where they've been remediating. That's almost all done. There's another $300 million remediation, and it's actually a little less than that. And there's the 1.7. So let's just call it that they've just shelled out $2 billion. But it's important to point out that there's a $5.5 billion number, which includes everything that they've spent, including legal fees. Now, I don't think people realize, but during the really hellish times for banks in between 2007 and 2009. The legal fees were billions of dollars, and Wells is paying billions of dollars in legal fees. So they're trying to include that in their ultimate number. That's where they come up with a 5.5. That also includes other settlements that you haven't heard of yet. But the whole thing that I'm trying to express is that if indeed it's 5.5, they have the ability to pay it, and it's the bottom.
Yeah, I mean, look, this is, I would say today, it's progress in the work of moving on from all of these consent orders that they've been they've been trying to clean up for the last couple of years now. Progress on one means more progress towards the eventual lifting of the asset cap, which is held back.
Right, and it's been, we're talking about coming up on the 6-year anniversary, which is in February. And I will tell you this: I would be willing to bet that this thing will be done by year end, and that's one of the reasons why, to me, it's a great buy, because they have a tremendous balance sheet. They have the fewest bad loans they've ever had. They will be able to buy back stock. I think they'll get permission. Charlie Scharf has not been able to do much except for try to replace the board, replace all the people who report to him. This was I'm going to use the term, this was a corrupt bank. Mm-hmm. Okay? I'm not saying it was a gangster bank, but it was a corrupt bank. And they had to do root and branch. And when you do root and branch, it isn't done easily. Yeah. And also, Charlie Scharf came in without the expectation that he'd have to spend the majority of his time working on these settlements, which he's had. You've not seen what this bank can do if Charlie Scharf is just spending all his time working at the bank.
Now, I know you're putting out this $5.5 billion. This is fresh reporting.
Yes.
But I do want to focus on the $1.7 billion just today, because I think that's incremental, and I think there might be a learning lesson from it, because companies are going to get charges. They're going to get fines from time to time. Unfortunately, that's just the nature of things. But if you take the $1.7 billion figure divided by the bank's market cap as of yesterday, which was $159.35 billion, that was about 1.06% of the bank's market cap yesterday. So earlier you saw the stock down around 2% pre-market. Does that make sense? Not necessarily, because the stock was down more than the charge itself.
It doesn't make sense because, look, this whole time they're negotiating, right?
Yeah.
Now, look, at this level right here, I think it's just completely overdone. This level seems right to me. Now, there's been a turn against the banks as people feel that the bad loans are going to start really accumulating. Wells Fargo's bad loan situation is better than JP Morgan, better than Bank of America, better than Citi, better than most regional banks. So the idea that it should go down that much is wrong. Mm-hmm. Is the 1.7 new? Well, look, you wake up in the morning, you have 1.7. Yeah, it's new. Is it containable? Yeah. Do people expect that there'll be big penalties? Yeah. Are the penalties done? Yes, if you use the 5.5.
Yep. I just wanted to put that out there as a way to kind of analyze if you do see a fine, if you do see a charge of.
Right. All right, guys. Welcome back. I just wanted to talk a little bit about what was discussed, guys, and I can't tell you much. I encourage you to join the CNBC Investment Club. That's option 1. And it's very important because the value you're getting from the club is great. They give you trade alerts. They let you know every move. There's many articles. There is a learning session. That's option 1. Option 2, if you can't afford it, then join my Patreon for $5. But as you can tell, the club yesterday bought Amazon. So we're going to talk about that. Amazon was a buy that they did yesterday. I still think if you're just getting in or you're listening to this for the first time, it is still a great opportunity for you to get into Amazon. Again, they already bought Disney early this morning before the club opened. They bought Disney. They bought a couple shares of Disney. The guys that are in my Patreon would have get that in the Patreon, guys. So if you're on my Patreon, please check your Patreon. I put out stuff every morning as to what they do. So they bought Disney. So let's get back. And they went in depth on Wells Fargo, guys. I definitely think Wells Fargo is good. I still prefer Morgan Stanley because of the dividend. So Morgan Stanley still have a great dividend and it's a great stock. I don't want to take too long, but I do want to talk about the oil stock. Coterra is at 24, and we hope that we know things are changing if you're looking at the market. So I like Coterra, still like PXD. Pioneer Natural Resources. So my advice to you is to look for something to buy, try to strengthen your portfolio, because 2023 would be a completely different year, and I don't want the boat leave you. So look for something to buy. Do I wish that you could have all the stocks in the club? Yes, but you have to understand that this is a multi-million-dollar club, so I understand that you may not be able to buy all the stocks. I can buy all the stocks, but you have to choose the one that you love, choose the company that you believe in, choose the companies that are down, and companies that has shown you over a period of time that they could do good. We're talking about company like Amazon, we're talking company like Microsoft, we could talk company like Chevron, they have a great dividend. I said Coterra, which is 50% oil, 50% gas. So look for something to buy, make an investment, and let us build wealth together. Anyway, guys, I want to thank the guys that joined the Patreon. These are the guys that are keeping me alive. These are the guys that keep those lights on. These are the guys that keep me coming back every day here. So if you want to support my channel, just join my Patreon. Anyway, guys, thank you for watching the video. Don't forget to comment and subscribe, and I'll see you tomorrow when we'll bring you more video, just giving a reaction as to what happened with the CNBC Investment Club. Just to let you know, the full video could be found on my Patreon if you join there, and there's a lot more information and articles and other things that I give on my Patreon. Anyway, guys, thank you for watching the video. Don't forget to comment and subscribe to the channel.